Welcome to the Transparent FX Academy. I'm Nick and I'm a top order on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite significant level of previous monthly resistance, which has now turned support. In fact, from here, all this previous rejection to the downside was created. After that, the market broke above the zone. And at that point, that previous resistance became support at this level. And this is not only previous monthly resistance turn support, but it's actually a confluence of support area, because if we look closely from a pattern standpoint, we actually have an impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements, both lining up exactly inside of this previous resistance turn support, creating a confluence of support inside of the zone from which we could expect a potential reversal to the upside. Dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, what we can notice is that at the moment the market is rejecting exactly the previous weekly low. From here, this previous rejection to the upside was created. Again, the market here reached the zone and started rejecting it to the upside. And in a situation like this, we could expect more potential bullish continuation to be created away from the area. Going down on the daily time frame, what do we see? Now, from a daily standpoint, price action is quite clear. We have a market which has, in all this impulse to the upside, one candle which is essentially of a different color, which is exactly this red candle here. This means that during this move to the upside, the market found quite strong resistance inside of the zone that made the market create this rejection to the downside. Now, after that, the market broke back above the zone. This means that this area is previous daily resistance that, now that the market has broken into the upside, is turned support here. We can also notice, as we have already seen on the monthly time frame, that since we have an impulse and now the start of a correction, we can also take our Fibonacci from the low to the high of this impulse leg, and we can notice how this previous daily resistance turned support is the area exactly in between the 0.618 and 0.786 of the Fibonacci taken on this impulse leg, meaning that we actually have confluence of support inside of this area, inside of which we have good probabilities of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from the area. Now, why do I say more institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so the COT data, which is essentially what hedge funds are doing in the market, and we check the data precisely for gold, we can see how with the last report, we went from having 101.9k net positions up to 123.27k net positions. Now, this is a massive increase of the net positioning, with 9,700 longs added with the last report and 11,600 shorts getting closed. Now, this shows how institutions are currently moving to the bullish side of this market, making it stronger, with 236,000 longs and only 112 100,000 shorts recorded at the moment with the last reports from an institutional perspective. So way more longs than shorts, making gold stronger. Now, combine this with the fact that from a daily perspective, we have confluence of support here. We can notice how if the market will actually reach this area, we would have good probabilities inside of a confluence of support area to see even more institutional longing, which at that point in turn would further increase the probabilities of a potential rejection higher. We can also notice that from a pattern standpoint, if we follow the movements here, we can see how we had an impulse, correction, the market then tried continuing higher and currently is melting to the downside, creating essentially an M pattern. What we know is that in general, after the creation of an M pattern, we could expect a reversal higher for the completion of the M pattern at the neckline, which is the previous support turned resistance. So we also have a bullish pattern from a daily standpoint. So if the market will correct to this confluence of support, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here past the testimonials, you will see that at the moment there is a massive special promotion in which you have the possibility to gain completely free access to the mentorship program by following 3 very easy steps. So I really suggest that you go and check it out. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.